Still haven't found what they're looking for. Hi, this is Dean Jenkins with Follow Me Trades, and this is our weekly market update for the week coming up of January 23rd, 2017. Of course, my opening line, still haven't found what they're looking for. I'm referencing the U2 song, we still haven't found what I'm looking for. And the market still hasn't really found what it's looking for. And what it's looking for is specificity in policy for the new Trump administration. What's really going to happen? We've heard all the rhetoric, we've heard the promises. Now, what's going to happen? What's going to be real? And as I pointed out over the last couple of weeks, post-election, we had a big rally up to almost 20,000 points on the Dow Industrials, and it stalled, and it's been going sideways in the channel for over a month now. It hit this ceiling. I don't know if it's glass, but there's a ceiling there on December 13th, and here we are on January 20th, and it's still up against that ceiling. Now it's starting to move down just a little bit, but when we get some specificity, when the market gets what they're looking for, it could move up. We could put in a new high, this historic emotional level of 20,000. I'm still convinced we're not going to put in material highs, and by material I mean up to 21, 22,000 on the Dow. We may hit 20,000, but the long-term picture remains the same in that we're at the end of an 8-year bull run, and historically and traditionally and from all technical analysis, trends don't last forever. They do correct. And so at some point in our future, there's a correction coming. That is pretty clear. We don't have evidence yet that it has started. When it does, we'll have time, we'll have some warnings, we'll be able to trade it. And again, we could hit 20,000, we could go up a little bit more. I don't think we're going to put in material highs. So we got to keep watching. We got to wait to get what we're looking for, and that's specificity, and the market hates indecision. We'll see how the market and all the participants react when we start getting some specificity, when we get what we're looking for. And we'll trade accordingly, and there'll be good trades to be made to the upside or to the downside. For those who are prepared, for those who are informed, there's profit to be made in any market condition. The hardest thing is when it's going absolutely sideways. So let's pick a direction, let's go. Meanwhile, we'll be very careful. We'll use risk control, and even through this condition, even through the toughest conditions, we're still eking out some profit here, so that's pretty good. All expectations are that the new president will get to work, not waiting for Monday. We'll probably hear some news over the weekend, and that may affect the market open on Monday the 23rd. And we'll be ready for that, and we'll be trading that. We'll provide updates as that plays out. So let's go take a look at gold and oil, as always. So here's the daily gold futures contracts, and as I've been updating for the last few weeks, it looks like we found a bottom in gold for this move through the second half of last year. Nice rally. It may pull back and then reverse and continue up. I think there's a pretty good probability we're going to reverse and continue up into the next leg of this gold rally. It's not the perfect price pattern, but this evidence, this strong rally off the bottom, we probably may pull back a little bit and then take the next leg up. So we'll give that update, and there may be some great trades coming in gold, but we got to wait and let it play out and wait for evidence. So that's the picture on gold at this moment. Here's the oil futures contract on a daily chart, and we are seeing some bullishness. Higher high, higher low, higher high, higher low. Looks like it could be heading up, but it's not doing it with any authority yet. We want to see this level up here at about 56.27 taken out. We're currently at 53.22, the close on Friday. If we can get that, then it's probably, highly probable, going up into the 70s to 80s. Pretty sharp increase in the price of oil. This is all primarily based on OPEC, non-OPEC producers sticking to the agreements that they made to cut production, draw down inventories. And we'll see if that actually happens. There's a history of the major oil market participants, the producers, making agreements and not sticking to them. So we'll have to wait and see. So a lot of indecision in the market right now, whether it's the major indexes. Gold's probably the clearest. It looks like we got a rally. We may get a short-term pullback and then the next leg up. Oil, pretty good chance it's going to head up, but not for sure yet. And we got to wait for this key level to be hit. Next week should be interesting. I expect some good market movements as specifics of a Trump administration policy become clear and get announced, and executive orders get canceled from the previous administration and new ones get implemented. So let's wait and see. If there's something dramatic and meaningful, I will provide a midweek update. Otherwise, I'll catch you on the next one a week from now. So stay tuned. It's never dull. Thanks for tuning in. And again, we'll catch you on the next update.